Assalamu Alaikum everybody, welcome back to the channel. In today's video I'm going to share with you two companies that I own in my portfolio that have recently released their earnings. We're going to look at their report and we'll see how the company actually performed the last quarter, and we'll see hopefully what the future holds for these two companies. Now this is my passive income portfolio, this is my dividend growth portfolio. I've got the two companies that I'm going to share with you today are Apple, and I own about 33 shares on Apple, and Microsoft, I own about 12 shares in that company as well. So we're going to dig deeper, we're going to have a look at it. It's not going to be a long video, so I just want to show you what I normally do when these companies release their earnings. So I just find the numbers, look at it, see if there's any positives, negatives, so if I basically, and it gives me an idea whether I should be worried about the company in the, going forward, or should I sell it, should I still hold it, even though I normally make my decision, I make my decisions the day that I bought that I'm going to hold these companies for maybe at least another 5 years, okay, minimum. But if something's changed and the fundamentals of the company has changed, they're no longer making profit because of whatever reason, okay, then obviously I would have to look into it and think about what I want to do. For example, I'll give you a great example. I owned what is it called, Intel, okay, and then when their revenue came out, and they basically, one of the things that was said in their earnings report was the fact that they had to delay the release of new chip, and because of that, AMD and other companies have taken over the lead from their side of that side of things. That just was the starting point. So from there onwards I sold my shares, and after that it went down, and then there was bad news after bad news, to the point where they had to get rid of the CEO and hire a new CEO. So in those kind of situations, alhamdulillah, I was lucky at that point, but sometimes it's really nice to see the earnings reports, just to see if there's anything that you'd have to worry about, or if you're happy with everything, just carry on holding into the company. Alright, so let's have a look at Apple very quickly. Apple have reported over $100 billion in revenue this year, okay, $111 billion, that's what they have got in fact, okay, and that itself is crazy. That is huge numbers, okay, in comparison to what other companies are doing. It's like, this is madness. This is like 6-7 companies revenue put together. Those companies that are in the S&P 500, if you put together maybe about 10 of them will actually even not be able to reach this. So this is huge. We know Apple is a great big company. It's probably one of the biggest companies, and if you look at, I think there's like 2.3 trillion dollar company market cap wise. So that is huge, we know that, but to still get over $100 billion in a situation where everybody is losing their jobs, and basically there's so much bad news out there, that's really good to see. That's absolutely amazing. This is why I love about this company, why I love this company. Now, earnings per share was 1.68, basically it has beaten the estimates. Revenue was, like I said, about $11 billion in comparison to $103 billion, beaten by up 21% year over year. So that means basically they've beaten what they've their revenue from last year by 21% year over year. Okay, iPhone revenues 65.6, okay, 17% year over year up. Now this might slow down next quarter, and the reason I say that is because they only released it, I think it was in November, December, yeah, around November time they released the new iPhones, iPhone 12, and because of that, obviously, they had a huge, sales at that point. Even though a lot of their stores were closed, they managed to sell a lot of these iPhones. Now, maybe if the stores open again, it might be the same or slightly better than this. Okay, but at the moment, the way things are going, I don't think it will actually beat this next quarter, but we'll see. We'll see. Sales revenue is one of those analysts are saying next 2-3 years will probably reach about 30 billion. iPhones are great, and the majority of their revenue comes from the iPhones at the moment. But what Apple is trying to do is diversify their, obviously boost up all the other revenues, so they don't just rely on iPhones. And again, for a big company like this, it's good to see that innovating, they basically creating other things like the service revenue side of things, where they can actually grow, up to $30 billion basically a year, which is amazing. And this is up about 24% year over year. Other products revenue 12%, over basically about 13%. Again, 29% year over year, which is great. The Mac revenue was about just slightly under $9 billion and is up by 21% year over year. iPad revenues, again, 41 year over year. Again, this could potentially be because a lot of people are stuck at home and they have to get those new computers. That could change next year. I don't know. We'll see what happens. So again, as you can see, there's nothing negative here. Everything looks perfect. I think that's what you want to see from a company like this. And basically, one of the things the CEO was saying is, he said, taking the stores out of the equation, particularly for iPhones and wearables, there is a drag on sales. Now, what that means basically is because all their shops were closed, and some of them were closed, for example, in China, where they have a massive growing, customers, and in America and so on, because of the pandemic, because of what was going on, the stores were closed, therefore their revenue actually was slightly down. Now, imagine if that was basically not the case. If everything was open, they probably would have tripled their revenue. So again, really good basically to see that the company is growing. And one of the other things I want to share about Apple is this. This came out about a few days ago, okay, that they're actually linking up with Hyundai to actually create a basically electric car, which is really good. I mean, Apple, whatever they do, they always come up with some slick design, amazing. I love Tesla and I love everything about Tesla, but at the same time, Apple electric, I know they're not going to start until like 2024, but whenever they start and whenever these cars come up, I'm sure it will be great, and I'm sure that will add huge revenue to their overall profits. Now, great company. So let's have a very quickly in simply save dividends, 99%, amazing. 2.3 trillion company, the only company out there that's actually this much market cap wise. Volatility at the moment is 1.16. Again, that's tech companies, they tend to be slightly volatile in comparison to other basically companies, other basic sectors. The dividend growth about 6%, not bad, but I'm happy because they are growth company. So let me just show you one of the things that I love about this company. So free cash flow, which is what's left after company has paid all of its bills and reinvested to maintain and grow its business. This is really important, and normally analysts basically just to see the free cash flow per share grow this much, and if you look at the free cash flow margins as well, which normally analysts are looking for about 5% to have to 23%. These two basically means this company is so profitable, they will not be going out of business anytime soon, and it's really great to see what they're doing. Absolutely brilliant. I own it. I will hold on to it for a very long time, and inshallah I will see how things go. I might add to my shares at the moment. I feel like it's slightly overpriced at the moment, but I think I would add it maybe a couple of more shares in the next months to come, inshallah. Alright, so the next company that we need to look at is Microsoft. Microsoft reported about 17% revenue growth this year, and a lot of it was a lot to do with the cloud business, which we're going to look at in a second. Now, in terms of one of the major thing Apple is trying to achieve at the moment is to build their Azure or cloud storage place. Okay, and what they're doing is basically, it's not a place, it's the cloud storage that they actually built. They've been building this in the last few years in terms of revenue wise, in terms of growth, in terms of what they basically trying to achieve. They're obviously still producing all the Microsoft Offices, all the Windows, and in terms of gaming and all the other things. but they put in a lot of focus on the cloud side of things, okay? And the way the world is going, and the way things are going at the moment, the cloud is becoming a business that's booming. A lot of the companies, I think the best performing companies out there right now are the cloud computing companies. And the reason for that is because everybody is moving away from, you know, holding everything on your hard disk to everything holding on the basically on the cloud side of things. A lot of the companies are moving their offices and they're storing all their software, all the applications, everything they own on the cloud. So they are now creating a cloud that's not just a storage, but that's smart. Okay, that in terms of software, in terms of basically how what they do on the day-to-day side of things, in terms of analysis, in terms of holding the data, security side of things. So this is becoming a huge business, and Apple is based, and Microsoft is one of those companies, as well as Amazon, that are taking advantage of what's going on at the moment. Okay, so it's grown this about 50% this year. Analysts had expected around 42, so they've beaten that, which is excellent to see. The more personal computing segment, so like Windows, gaming, and so on, basically generated about $15.12 billion in revenue, which is up about 14%. Okay, if you look at the other thing I wanted to show you is this, the revenue side of things. Okay, they were up about 17%. So it was about 43 billion. It's not like Apple where you've got over $100 billion because of the iPhones and all that stuff. But again, to have 43.1 billion in revenue and growing it by 17% this year, and basically year that has been absolutely crazy, is really nice to see that. When it comes to operating income, was about 17.9, again increase. Net income, okay, is about 33%, and that is what you want to see. Now they can use that money to now start being, you know, innovating and so on. Let's have a look at very quickly their free cash flow margins, because that's really important to me anyway. It's about 5%, basically what the analysts normally say they would prefer. It's about 24%, and again, that's excellent, by the way. If you don't know what that means, basically that's the free cash from flow is the amount of cash company generates after paying all of its expenses and investing to maintain and expand its business. Now that is really good, so they can use this money to do whatever they want to do. Sometimes they will buy a new company for that, because they might see a company that might be, you know, a good addition to their company or portfolios of companies, and they can add that to and buy those companies. Now one of the other things I want to show you is this. I saw this and I couldn't believe it, because how is Microsoft undervalued at the moment? The fair price should be about $258 per share, but currently trading about 242 as we speak. Future growth again about 10% next year. Okay, they still have a great financials, so that they've got more assets, okay, in the short term and the long term both. And this is really important, because if a company is if the company can't pay their debt, so the liabilities is basically everything the company has to pay, for example, okay, everything, you know, the debt side of things and all that stuff, right? If they can't pay, if their liability is more than their assets, then the company is in trouble. And especially for the long term, you don't want to do that. Like companies, like if you look at AT&T and all these companies where their liabilities are more than their assets, I would never be able to invest. Even though they great company, I would never be able to invest in those type of companies, because you know if something happens, the company can easily go down and so on. Their dividend, you know, not great, but it's easy to maintain it. And obviously if you look at the dividend safety, okay, obviously it's no surprise that it comes about 99%, because they are able to do it. When it comes to the beta side of things, again, Microsoft is slightly volatile in comparison to the rest of the markets, but again, that's for technology. Technology companies tend to be like this normally, okay? They grow in their dividend, okay, 10% every year, which is fast, which is great to see. Again, there's a growth in this company. They're currently undervalued. If you look at this, okay, currently undervalued. As well as that, they have amazing cash flow. They've got so many products. They're a very innovative company. They've got so many products that are in the market, whether it's the gaming side of it, software side of things. And one thing I love about this company is what is called SaaS, which is basically software as a service. So all the Microsoft products that we pay for, okay, we have subscriptions. All the other software that they have, companies use that and just pay monthly payment. That is great, because what is happening is, instead of just buying a software, remember back in the days you can just buy, you can go to the shop, buy a software and then use it, and then that's it on your CD. Now it's different now. A lot of these companies are now basically going for kind of online download, where you've got pay monthly subscription. So for example, whether it's a Norton antivirus and whether it's other things, a lot of these companies are now doing what's called SaaS, which is a great business model, because what you're doing is you're actually making sure these basically people do not leave your company. So every month they pay what they used, and then that's it. So that's a revenue that you can rely on, okay, year after year. If you're innovating, if you can making it better, if you're basically making sure your customers are happy with the product, you know that you've got that solid income that's coming from the monthly subscription side of things. On top of that, you've got things like the innovating new cloud services. That is amazing. That honestly, these companies are really good. I'm happy the fact that I invested. One final thing I want to say about Apple, okay, and we've talked about Apple before, and I want to quickly mention that because someone asked me on the chat, basically down below, said about something to do with Apple and what's happening in China and the fact that they actually involved all of that. Now I've done my research, and I honestly swear I can't find it's basically anything that newsworthy that says Apple is involved in what's happening in China to the Muslims, basically. Okay, so if anyone has any details or information regarding that, please let me know. But as far as I know, it's just a speculation. Again, big company like Apple, I don't think they will get involved in something like that. I don't think they will use these poor basically our brothers and sisters who are actually struggling there at the moment, and just no, I don't think that's happening. And if anyone has any information regarding that, just drop me a link and then I'll check that out. But as far as I know, there's nothing like that. I honestly do not invest in any companies that are based in. So I had Alibaba before all of this. As soon as these things start happening, I've heard about it, I just dropped it. I had Neo, sold it straight away. I had emerging markets ETF, where Alibaba was the main company in there. It was like about 17% of that ETF was Alibaba, sold it. And all of that is because I really want to stand up with with our brothers and sisters and what's happening in China. So if anyone knows anything to do with Apple being involved, that side of things, please let me know. Anyway, I hope you enjoyed the video. Thank you very much. Please, if you haven't subscribed, please do so. Link, share with your family, friends. I want this channel to grow. Again, I'm in a learning curve, and inshallah, all I'm doing is sharing my journey and what I'm doing and how I analyze these companies and so on. If you enjoy the video, even 5% of the video, please share with somebody else. Hopefully they will enjoy that as well. Thank you very much. Take care. Assalamu Alaikum. See you next time.